Hey traders, welcome to Charts and Coffee. Hope everyone had a great weekend, relaxing weekend. Got to do some things other than look at the charts. Although those of you that joined me for Top Tier Outlook, we got a little jump start on the week. So let's go ahead and start there. So Sunday evenings, by the way, at 6 p.m. Eastern, we jump into the YouTubes and the Twitter X's and we take a look at what we have coming up this week. And what we have coming up this week is not only a voluminous, is that a word? Voluminous number of FOMC members. For sure, it's a vomitous number of FOMC members. They just don't shut up this week. And they're not just trickling in one at a time. They're coming in groups. They're coming in packs. So buckle your seatbelt, gang. All it takes is a couple of these members to start talking hawkishly, to start talking about rate hikes over rate cuts, and it will create confusion. It will create angst. And I just look at this calendar and I shake my head. None of the FOMC members that are speaking's name is Powell. So keep that in mind as well. We do have Janet Yellen speaking on Tuesday. But other than that, gang, what we really need, if this is going to happen at all, is regardless of what the 7.2 million FOMC speaking engagements this week are scheduled to produce, the only sort of leveling, calming factor will be the Wednesday 2 p.m. FOMC meeting minutes. What will be really important will be for those minutes, which are the notes from the previous meeting, to be in line with the statement, to be in line with what, more importantly, Powell said during the press conference. If the meeting minutes, and this won't be until Wednesday afternoons, we have 2 awful days of just hearing from these people, one after the other. But come Wednesday, if that messaging from the press conference can line up with the meeting minutes, things should settle back down and traders will keep with the expectations that we're going to see rate cuts. And that's still what's very much factored in. Starting in September, on the September 18 meeting, you can see that there is still a higher probability, not overwhelmingly discounted, but there's a higher probability of rate cuts starting in September at the meeting that's on the 18th. And then by the time we get to the end of the year, there is certainly factored in at least 1, if not 2, possibly 3 quarter point cuts, but we're definitely sitting in the 1 to 2 quarter point expectation range. And that's going to be likely enough to keep equity traders optimistic and looking to the upside, regardless of whatever nonsense is going to be spewed by the numerous FOMC members this week. Raghee, tell us how you really feel. So that's what we've got. That's what we've got coming up. All right. So if we are looking at the S&P this morning, just really very sideways. Remember, we had OPEX. We had the day before OPEX, and this is the 15th. Here's your 16th. Here's your 17th. This is Monday's action. So we're absolutely going flat, maybe in anticipation of whatever is going to be said. Look, everyone can see the calendar. Everyone knows it's on it. Everyone knows FOMC meeting minutes are coming out. So if you're waiting for an opportunity to get long, and I am definitely looking at the long side of the broader averages, NASDAQ, S&P, Dow, let the FOMC what they do best, create some volatility, maybe create a little concern, and drive us back down to the price movement range support, that support level derived from historical volatility, sitting there at a zone that tells us it's not exactly out of the reach of currently where we are right now. So that would be fantastic. All right. Let's go ahead and jump on over into the questions. And by the way, gang, I mention this when I'm in the Sector Secrets Mastery Room. I mention this wherever you are. If you have the chance to pick the brain of a trader that you'd like to learn more from, get specific, right? I see a lot of questions as if we're calling Top 40 Radio requesting our favorite song. Let us know here on this side of the mic, on this side of the camera, what you're looking at, what time frame you're looking at. Are you in it? Are you looking to be long? Are you looking to be short? That's a conversation, right? Otherwise, hey, look, I'm happy to do Top 40 Radio as well, but let's get the most time we can from the time we have together. All right. That being said, let's jump into AMD. Any suggestions? Yeah, don't trade it right now. There are plenty of other symbols within semiconductors that look a whole lot better than AMD. AMD's having a couple really good days, but it's not one of the stronger names. When you look at relative performance. Now, if the SMH continues to move higher, AMD will probably benefit. All right, next up, can I go over recent swing trades using the hourly daily price movement range? So there's an hourly price movement range and there's a daily price movement range, JR. So if you're looking at the hourly price movement range, those are day trades. If you're looking at the daily price movement range, that's more for swings. And JR, that tells me you are not checking out the free videos. So if you're either on my YouTube or if you're on the Simpler Trading YouTube, I had a 10-minute video recapping just a handful of trades from Friday. So definitely do check that out. I think you'll find that a lot of detail packed in about a 9.5-minute video. If you're on my YouTube channel, you'll see 5/17/24 recap. If you're on the Simpler Trading YouTube channel, it is the Friday free video. All right. Next up is I bought IBIT about a week ago. Earlier than I needed. Well, need is such a funny word, right? Before I started using grab candles, I had used them. I would not have taken a position. Oh, okay, cool. So, right. So what you're saying is, well, here's a couple ways to look at it, Paul. The downtrend was tricky, but you do see some decent support at the Darwin. So you might not have bought it too early, right? You might not have bought it too early. What I would say is anytime you're in a market that's just recently transitioned from a downtrend to neutral, let me show you a pattern that's really pretty cool. So if you're a fan of grab and if you're a fan of market structure, you know that by design, I look for my indicators to tell me what I am and am not allowed to do, right? So in the context of an overall downtrend, if I'm looking for a reversal, this is a really cool pattern. And this is not a textbook example, but this is a 1, 2, 3. The ideal way this triggers is that by the time we get through the resistance right here of the 2 point, right? By the time we get through the resistance of the 2 point, we need a neutral environment. And you can see that's exactly what we had. So, depending on where you got in, if you're in around 37, and that high was right around 36.82. Not too bad, right? So awesome. I'm glad those grab candles are helping you. Fantastic. All right. Next up. What are my thoughts on Tesla? Don't trade it. I think there are far better stocks in the consumer discretionary, the NASDAQ and the Dow. I know that's a favorite. I would think of all the things out there, gang, of all the things out there that we could trade. Why this? There are trends that look a whole lot better than this. And this, of course, is going to move and groove with a lot of news. Take a look at the daily price movement ranges. I don't know if you're looking to go long or short, Amir. I'm assuming long. I have to assume long, I suppose. And so if you are looking at the long side, daily price movement ranges, that price movement range of support would be a great place to do it. All right, VLO. Is it poised for a breakout? So let's talk about what a breakout would be. Thanks for the question, Tommy. So if I'm taking a look at where the support is on VLO and where the resistance is on VLO, there's a couple ways we could do it. I know that there's some bigger resistance up here. I can look at another level of resistance right about here. So anytime I'm looking for a breakout breakdown, remember what we're really talking about is momentum. Right? What we're really talking about is Momo. And by the way, the 1, 2, 3 that I was just walking through for, what was it, IBIT for Paul? Paul, if you haven't already, check out countdowntrader.com. In fact, go to Google and Google Countdown Trader 1, 2, 3 or Dow 1, 2, 3. And you'll get about 2 or 3 articles that the Trish boss has written up on those 1, 2, 3 continuations, 1, 2, 3 reversals. It's a price pattern. It's not a chart pattern. We're not looking for shapes and handles and shoulders and heads. It's actually a price pattern. And you can check out how that works. I think you'll really dig that at countdowntrader.com. And if you want to find specifically that article, you can find it there. But 1, 2, 3s are momentum breakouts as well. So then I'm going to identify where the resistance is, and I want to identify where the support is. Really important. And notice I'm using the automation of Darvis, the Darvis levels to do that. I'm not arbitrarily drawing them in. I'm just looking at the ones that are already there. I'm tracing right over top of them. And if I'm looking for a near-term breakout, probably through 161. Probably 1 through 161, Tommy. You can see there. So if you're looking specifically for a breakout, I'd say that's around that 161 level. Actually, no, I take that back, around 160, 160.20, right? So it has, we could definitely say that it has broken out. But I'll tell you, see that candle? It was in a downtrend, red candles, and we're getting our first look at the gray. Here's another level to keep an eye on, and that's going to be the resistance right through here. So if you're thinking, Rog, it was in a downtrend, we're finally getting a more neutral trend. And so what I would say is if you're looking for a second level, keep an eye on this. This seems to be both the high from 425 and 429, just shy of the 169 level. Now, if you want to take it another level deeper, this is something we would do in the Sector Secrets Mastery. We would take this VLO chart over to TradingView, and let's do that here. Take this VLO chart over to TradingView, and there we go. And then I'd start to look at either the year or 12 months, and I'd take a look at where the point of control is, where the volume is. Take a look at all the volume. I know it's a little difficult to see, but if you look at the right side of my chart, take a look at all the volume right in there. Get a volume ledge right in here. So taking out this group of kind of resistance, this sort of cluster of price action right in here, that would be a secondary Momo breakout. So take a look at volume, right? Take a look at volume. And you can do so on TradingView really easily. And again, all you need to do is maybe look at this year's volume. And that's a really good look right there. You see that volume ledge? Boom. By the way, look at the momentum breakout. It was just below, that momentum breakout was just below where the price breakout was. So take a look at where volume is parked on a chart, and you'll find that there's a lot of very interesting information waiting on price-based volume as well. Thanks for the question, Tommy. Next up is Qualcomm. I don't use, hey, Smoke Divine, I don't use chart patterns at all. I don't look at flags. I don't look at headers. So I'm the wrong person to ask. But what I am happy to do is take a look at the 1 hour chart with you and see what we're dealing with. Qualcomm on a 1 hour chart. Now, I can see where you're, so let's look at it another way. For every trend line, which, let's be honest, trend lines, is one trader drawing the flag from here? Is one trader drawing the flag from there? As far as support, is one trader looking at this particular level? Is another trader looking at, where are the lines being drawn from? And there are ways to make that repeatable. There are 4 factors to drawing a trend line that make them more repeatable. But I can see where you're looking. Now, here's another way to look at it. If you're looking at Qualcomm on a 1 hour chart, this is just the way I would think about it, is, where are support and resistance levels waiting? What is the structure of 1 hour Qualcomm? So this is where, if I have a trend, which I do on 1 hour VLO, but let's go take a look at 1 hour Qualcomm. All right, let's see what we got here. All right, so if I've got this movement on 1 hour Qualcomm, right, I could wait for the breakout, but that's what a flag would force me to do. Or I could say to myself, where has support been? right? I can see this support right in here. I can see that I've got a daily price movement range. So I've got my PMR support right here. I could look back and see if there are any Darvis levels that are coming forward. I could look at previous lows. So what I'll say is if I'm looking at a flag pattern where the expectation is, I'm guessing for a breakout, if I'm looking bullishly at Qualcomm, any level of support would be a great place to set that call up. And here's why that is especially important. Qualcomm's moving sideways. Qualcomm could move sideways for the next 2 weeks. Qualcomm could move sideways for the next 2 months. Whenever we have a non-trending environment, just presume it could go sideways for a whole lot longer than our option expiration, right? That's always a challenge in getting into a sideways market. Now, do I think that's likely to be the case? No, but take a look. You know, Qualcomm's been sideways since Thursday morning, right? Friday's sideways, and it looks like we're still going sideways into Monday. So what I would say is the best way to position yourself in a non-trending environment is not to wait for the breakout, but rather, if you can, take advantage of some sort of support level and buy your call from there. Because what it does is even if Qualcomm, clearly I need to finish my coffee this morning. I'm still working on voluminous. I'm still working on that word. All right. So if I'm looking at maybe this resistance level is never broken, think about the choices you have. If you buy at support and you're running out of time on your option, that level can become an optional target. You could actually pay yourself on the other end of the range. So I would say, even if it's a flag pattern or a channel or whatever, if we can identify what the resistance of the zone is, what the support of the zone is, and then we step back and say, if I'm expecting a move to the upside, we should have directional bias in every trade. There should be no trade we ever get into where we have no clue if we want to be bullish or bearish. I think a lot of traders put directional bias too far down the list of things that they should demand of a symbol that they're going to trade. That symbol should be poised for higher highs or lower lows, and you should be fairly confident based on the structure and based on your analysis that that's what's most probable. Not that's what's going to happen, but that's what you want to set up for. I agree with the long side here, by the way. So if that's the case, then I can position myself at support and give myself choices on the way back up. So I hope that helps. And again, this doesn't need something as subjective as a chart pattern, right? I haven't used chart patterns in probably over a decade. And what you'll remember as you say, you know what, let me not look for a pattern. Let me just look for the pieces. If you start drawing trend lines and support and resistance on your chart and you step back, you'll see that the pieces have either given you some sort of pattern or they haven't. But if you tell your brain, go find a pattern, it'll find it. Just like if I look at the clouds and say, I want to find a bunny rabbit, I want to find a dragon, I'll find it. So be careful with that. A lot of times you tell your brain to go find a pattern, it'll find it for you. Not that that's it at all what you're doing, but if you step back and look at support and resistance, it's going to give you a lot of very cool choices. All right. And by the way, the best kind of support and resistance would be the horizontal variety, not the trend line. And think about the aspects of a trend line, just a couple of them that you should consider. How many touch points? How far back in the look back are you looking at the trend line? How close to current price action is the trend line, right? How many, if I look at even the spacing between touch points, once upon a time, I automated trend lines on a platform called eSignal. And I use these automated, I didn't do it, my programmer did. And I used these for a long time. And I remember asking him, what are you asking of the code to do? And there were 4 different factors. And I think a lot of times, unless we start thinking about those factors of what a minor versus major trend line can be, they can get really subjective. So start with the horizontal variety, maybe start with an automated variety like the Darvis 2.0 or the daily price movement range or the hourly price movement range. And it'll put you in a far more repeatable type path in terms of where those zones you can act at are. All right, gang, as always, thank you so much for being here for Charts and Coffee. Thanks for your time as always. I'll see you tomorrow, same time, same station.